Welcome back to New Money. This evening we're discussing investments. My guest is David Shapiro, and if you'd like to email, my details will appear on the screen. David, I'm going to go to Lucas in Bantry Bay. He says, I hold Billiton shares both in my offshore and onshore portfolio, and it has been an absolute dog of a performer in the last few years. I would appreciate your views on this. I think everyone's got Billiton.
Everyone. You know why I'm smiling? There was a comment by Patrick Evra over the weekend. Patrick Evra played, you might know, you're a Man United supporter. He was left back, a great supporter, and he said, Arsenal, that's my team, are like Netflix. You know, it's always, we're waiting for next season. You know, we're always waiting for the next season. And that's like Billiton and the commodity company. We're always waiting for the recovery to come. You know, when's it going to come? When we've got global growth. They're a good company. They're very solid. I think Anglo should have sold out to them. They've got the cash. But it's iron ore. It's copper. It's coal. It's those commodities. And if those prices are coming down like they have, if there's no huge demand, then the company is not going to make the profits that it promises. It's not selling. It sells and it makes decent profits, but those profits are not growing. So again, we're waiting for next season.
And we're also waiting for China.
We're waiting for, that's what I'm saying, we're waiting for China.
Yeah, for China.
To start demanding. Will it come?
With what they've done in China to try and prop up the market, and will that help?
I hope. I think they're very conscious of it. But Bryan, you know what we're picking up is that the population, people are losing their jobs. They haven't got the money.
In China? In
China, yeah. There's a shift where, you know, wealthy people are no longer spending on luxury. So there are a lot of concern about what lies ahead. And if you're concerned about what lies ahead, you tend to save and you tend to hold back. If you're not confident in what's about to happen. China's trying. It's putting all kinds of levers, but not fast enough. And at the moment, we haven't seen anything stick that's going to give the global markets confidence in China. I remain reluctant. You know, take a step back.
Okay, that's investing in Chinese companies.
Yes.
But there are a lot of global companies who operate in China.
Yes.
And those profits didn't come through in this last quarter.
No. And though you'll find that in the Starbucks, you'll find it in L'Oreal, LVMH, all the luxury business, in the motor vehicle companies and so on. They're not coming through like we wanted to. There is a downturn in consumption in China. You know, China's always been a nation that's produced. In fact, now they've got too much production. It becomes deflationary because they dump all of their production on the rest of the world, which brings prices down. You know, and obviously that's no one wants that. You know, no one wants prices to fall too much.
And neither does Trump want that.
No. Yeah. So that's the answer. You know, what the global economy does, particularly China. You know,
and also, David, with a stronger dollar, it's much more attractive to be buying from China. And Trump wants to see that manufacturing takes place in the USA.
I want to tell you something quite, you know, Elon Musk, much of his production is in China. And yet he's very close to
Trump,
who wants to impose tariffs. So I don't know where this is going to end. I don't know how this kind of plays its way out. But you know, Chinese vehicles are the electric vehicles. They're not made in China, meaning that they're of inferior quality. They're pretty good quality, and a big threat. And that's one of the biggest threats to America is the import of Chinese vehicles, electric vehicles, competing with. You know, he keeps saying, "I'm going to give tax breaks." You know, you can get your interest deductible if you buy a motor car. As long as it's made in America, you know, that's so it's not going to happen. Yeah. You know, these are wild statements.
And David, Guli in Pinetown asks a very important question. He says, how important is AI going to be in the growth of companies? Yeah. And when will investors start to see any benefits? Because there's a cost of AI, and is that dropping to bottom lines yet?
We don't know. Not yet. It will. You know, it's the same as the internet. Remember in the 2000s when the internet came? Everybody knew this was going to be big, but they didn't know how you were going to monetize it. Well, if you want to know how it's been monetized, you know, look at Amazon, look at Alphabet, look at Apple, look at all those businesses. This will take time. The problem, Bryan, if you're a business and you say, I'm not going to do it, and it works, you're out the game. Yeah. You know, and the same way as Intel took their eye off the ball and have been completely swamped by NVIDIA and other semiconductor businesses as well. That's an example. So I think while analysts, and we all sit in lofty towers, with spreadsheets, while we are making these claims, I think as a business you can't afford not to invest in AI.
David, just touching on what you just said, I mean, we sit in a boardroom, we come out with good results, we pat each other on the back, we open a bottle of champagne or something and result, and then the market doesn't like our results. But we, as the executives running the business, are very happy. It's been difficult days. I mean, just put some correlation into that.
What I like to do is look at what I call, the absolute results. In other words, I like to take my way away from what analysts say and how they break up every little, line on the income statement and that. I like to look at exactly what you're doing. And that's what I made it previously. I'm saying I like to look at the revenue, I like to look at their costs, and so on, right through to the bottom line. What cash did they generate? What have they reinvested? Because that's the compounding effect, because what's left over, the profits of that business, is the base for future growth. And that's how I like to look at businesses in the same. If the share price doesn't respond, I don't mind. I just brush it aside, because eventually good companies, those results build on themselves all the time, and eventually I think the shares, good companies become too good to ignore.
And that's where it's difficult for you, because here you are taking a view and you're buying for the long term, and someone getting his portfolio at the end of the month sees the results for that month, was it up or down, and not realizing that you've taken a long-term view. And you're saying, what's it likely to be in the next 6, 12, 18, 24, 36 months, 5 years?
Exactly. For me, I keep saying, and I might have said it on the show before, what we do is not difficult. It's not difficult to find a good company. What's difficult is managing the emotions of your clients who monitor their wealth literally on a day-to-day, minute-to-minute basis, and that's it. Good companies will prevail, and the one thing that is around it you can find is some really superb businesses. So, we just have to manage our way through that.
That's where we become financial psychologists. Then Rudolph in Gauteng says, which are more sensitive to market conditions between growth and value stocks? What is the impact of any of these factors such as inflation, interest rates, and what are the future prospects? Talk about value to growth.
I don't know whether there is anything called value. I don't like value companies, because value companies are probably lowly priced because the growth prospects are dull. There's no growth prospects. So what you're looking for is a company that doesn't. I'm going to give you an example. Okay, Mr. Buffett, whom I admire significantly, I've been a great follower. He's got 300. Well, the media are quoting 325. It's actually $310 billion in cash. What's he going to do with it? He can't spend it. And I say, do I really want to buy a Berkshire with that kind of cash, who haven't got any ideas on how to spend it? You want to go to a company who knows what to do with the business. And even if you looked at his results, they've been pretty flat, which is it's US Incorp. There's a lot of businesses there. So when you look at those, he's getting into growth kind of territory. He's got everything that you need. So I like to look at businesses where I know that they've got products which we're going to use all the time, which society is going to use, and so on. And I think the ones that come through are, number one, the pharmaceuticals in the weight loss, obesity and diabetes, even though they've had a little bit of
a disappointing quarter.
Well, it's a new product. It's only been on the market. These haven't been on the product. It's taken them time to spread it around the world. But if you look at what this is going to do to health, in the next few years, that's the story. What happens in a quarter? They miss some sales and everybody goes tilt. Same with AI. We know it's going to dominate the way we do business. You don't have to try fine tune it. So it's those stories that I like to to focus on. We keep looking for what's next. We keep looking. Is there anything that we're missing? Is there anything we should be looking at? It's an ongoing process, and that you have to measure that against what you've got.
So let me get on to Harry in Port Shepstone. He says, are valuations as excessive as commentators state, and do you see earnings on the top technology and healthcare companies falling?
No, I think I project forward. You know, I like to say, even if, and I always downgrade their growth. You know, if analysts say it's going to grow at 30, I say no. Okay, let me do 25. You know, let me take some of the edge off there. And still, the cash projections that we see on those big tech companies, and I'm talking, these are monstrous companies, very attractive. And so if you plot the growth going forward, we're not going to replace a Google. We're not going to replace an Amazon. They're so powerful. So when you look at that, they're not expensive. And they're coming down into the low 20s, the PEs, as we said earlier, coming down into the low 20s or early 20s. And over time, that's going to fall below 20. So you go look at some of the other companies, consumer staples, or that, they're in that same territory. You know, they're comparable, or pharmaceutical businesses.
David, last email for the evening. Kylie, how appealing are investments in weight loss drugs? We mentioned, you mentioned that. Brilliant thing. So I think you've dealt with that. I'm going to take Stephen in Belita quickly. Last email now. Which sector, both locally and internationally, will benefit by falling interest rates and increased investment in infrastructure?
Look, infrastructure, we've got to see the spend, particularly in South Africa. I've been looking at PPC, I've been looking at the cement companies, I've been looking at Cashbill for evidence of spending, even at the low levels. It's not there yet. It's a worry. Bryan, there's one thing that, you know, if this is the last question, a closer. You can't go back and say interest rates are coming back. In the past, these businesses did well. The reason is that post-COVID, our habits have changed. You know, people are not doing the same thing that they used to do. So you can't say if they brought, if they went and bought a luxury house, they're going to do that. Or they went to buy paintings or anything. People have habits, you know, their clothing. I mean, look at us. We used to wear ties on this program. You know, we're coming in jeans and techies, you know. And if you look at, I think not luxury, I think looking after yourself is a big thing.
Dave, we've run out of time. By the next program, we'll have a lot more to digest. David, thank you for joining me this evening. It's important to note our program is to provide information and should not be construed as advice. Next week's program, we'll be dealing with short-term insurance, and if you need to get hold of me, my details will appear on the screen. Thank you for watching, and good night.